Welcome to the Real Estate Show on KMED for August the 8th. Pete Belcaster and Joe Brett, the real estate guys, with you. I'm a principal broker with John L. Scott. Joe's a broker with John L. Scott Real Estate here in Southern Oregon. Like we say, we get together with you once a week here on KMED to talk about all sorts of real estate-related issues. You know, we've been doing this show for, we're in our 6th year, Joe, and it's really interesting. We've really never run out of things to talk about, have we?
Well,
we didn't even think about that.
The market pretty much assures us that we never run out of topics, or if something we talked about 3 months ago, it's got a different angle or a different spin by 3 months later.
Yeah, well, our listeners here on KMED, they know a lot about this real estate market and what's going on out there. And we've had some great shows on here in this last all summer, really. And we encourage you to go to realestateshoworegon.com, and you can watch them there. And we have the sheriff has been on, a great CPA. We've had our good friend Jim Remley made his first show with us from John L. Scott. He's the managing broker there. And today, well, we have the expert guy who talks about mortgage interest rates. That's Guy Giles from Ditech. And hey, how are you today? Nice to have you here.
Hey, I'm good.
How are you doing? Middle of summer. How you doing?
Feels like winter. I almost had to put on my coat this afternoon. Yeah. I rode my motorcycle across town. I think it was under 90.
I was going to say, where were you today? At least it's been a little bit cooler.
I bet you got some good miles on the motorcycle. Listen, been good riding.
Starting tomorrow, we're going to go we're going to take off for 4 days tomorrow.
Have you ever gone to Sturgis, South Dakota?
Yep, I was there last year.
Really?
At this time.
You
yeah.
were? Okay.
Yeah.
For those of you who are listening to the show, he might have mentioned that.
Yeah.
Yeah, if you still want to trust me with your social security number.
Yeah.
That'd be like going to Burning Man or something. I've never been to either of those things, but it sounds like that would be a strange thing.
I've been to the Rainbow Family Gathering, remember?
That's right. That was back back in the day, man. That was a long time ago.
That was a news assignment when I was in television news. I was not a participant.
I haven't heard of that.
Hey, welcome to the show today. Gosh, let's talk about mortgage interest rates, because that's what people are tuning in today for. And come on. You guys have been saying, everybody's been saying that, you read the newspapers, everything has been, they're going up, they're going up, they're going up.
That's more than you.
Well, I've been telling you,
conversations.
They're not going to go up, and in fact, they've actually dropped. So Guy, what's going on? Tell us your thoughts on that.
Well, I'm just still beating the same drum on that. There's just overall, the whole world economy is not that strong yet. So as much as, probably a third of the feds would like to raise rates tomorrow if they could. A third of them are thinking maybe next year, and a third of them just have no idea when they're supposed to raise them up. But it just really comes down to we're just not that strong yet in our economy.
Well, I wonder why do they have to raise them? I mean, do they have to do that?
I would say. It doesn't seem like
it's an era of cheap money. I mean, I understand that, but still, it's not like it's going crazy. People are going crazy.
I don't hear of anybody making hands over for money, just piles of money because of the cheap interest rates. It really is an economy that's really struggling to take charge.
And it'll just come down to inflation at that point. That's what they're trying to keep their eyes on when it comes to raising rates.
Yeah. Well, Lawrence Wong, who is the National Association of Realtors chief economist, and he's been here. We've actually met him.
He's been on the show.
He's been on the show. Anyway, he has his monthly article that he says, and let's draw attention to it. He says that we have surpassed the market today. In 2015, has surpassed the height of the market, which was in 2006, which was and it only goes by the median price. Okay, so I know people can argue but the median price in 2006 of this country was $230,000, and today, in June of this year, it was $236,000. So we've come back. It took a decade to get there, right? Wow. But it took a decade of low interest rates to get there, right? And look how long it took to get there.
An incredible bubble to push it that high long ago.
And if you want to stop it and change, if you want to stop it, you let interest rates go to 5 or 6%, I suppose, or even higher than that, and it would really stop it. Now, is that right? Do you think that? I mean,
it would definitely slow things down. I think, we'd have another scary thing on our hands if they went up too fast, because you'd have lenders still trying to loan money, and then all of a sudden you're getting back into the loose lending again, and that's something we really want to avoid. Part of the reason that the market is so strong right now is the loans that they're doing are good loans. We're not going in and just loaning to anybody with a pulse, thankfully, anymore. So, that speaks to.
And I would say, from what you hear, Joe, is that right? That's been the biggest difference. Is that even though we're back at that 2006 level of sales and prices and gaining, equity, and that the loans that are going out through you, people like you, that they are that ironclad, people can pay them back. That's pretty much what's the difference is. What's driving it, right? I mean, that's got to be it.
Well, it really is, and it comes down to where you want to invest your money. So if you're a little bit leery about the stock market, I think it's a little overpriced right now. And where are you going to put your funds if you know that people are doing good loans? I think that real estate's just a good place to do it.
And think how many people on our program have told us how much more savvy the people that are taking out loans are now than they were when they kind of got on that bandwagon and then had to go through some real hardships and tough times in their life. And nobody's interested in get on that bus again. And I think that's it. We're building a foundation. But you're right, Guy. We're still just building a foundation. We don't have the launch pad set, field, and ready to go to really take off yet. It's going to be a long process. I think the interest rates are reflecting that.
Yeah, I think that we're gonna be okay with rates for a little while. You know, I mean, if they do anything at all, I think it's just really fragile right now. So they're not in any rush to do it. They're looking for any sign to. Don't get me wrong. They want to.
I like that they don't, because I think it continues to make this market continues to drive it, and it's going to change it because the prices. Well, you were talking about historic interest rates, guys. So. Like in 1981. Okay, just give me the difference, because I know that they've come so far down.
Yeah, it's pretty crazy. Right now, we're not at the bottom. I'm locking in some people still in the high threes right now, but literally the average in October 1981 was about 18.45%, and just the difference in a 4% rate of $954 on a $200,000 house right now. It would be over $3,000 with that higher interest rate. So it definitely changes the purchasing power. I did some math a little while ago, and even a 0.25% in rate on a $200,000 house can change your purchasing power by about 5%.
All right. Now we're rising in this county by 12% a year. It's 2% a month, right? Isn't that what? 2% a month. 12% a year, right? Whatever that. Okay. What's that going to do to?
That's about 1% a month.
Okay. What's that was going up? It went up 12% a year.
I think the worst thing is I agreed. I didn't even notice the math error there.
I checked his math.
Yeah. What is that going to do to it?
Well, I think as far as the rates go, it's just really going to depend on where people want to do their money. I think it all speaks to a good place to put your money right now, because where in the world are you going to get 12% per year? Yeah. And know that your asset's pretty protected with a whole bunch of good loans going on around the world. I've been actually toying with the idea of buying another place myself. And if you just do the math on a $300,000 loan, you're looking at $36,000 you made on that money, and you're only paying 4% for it. Yeah. That's really not a bad way to go. Plus, you have the depreciation and all the write-offs of that house.
And as an investor, how much confidence could you buy with right now for a demand in the rental market going forward?
I saw 2 signs coming back. I had to go pick up my bike out of the shop, and it's kind of sad because it's actually anyway. Everybody,
that's another story.
We always laugh when the other guy's bike breaks down. But coming back through Shady Cove today, I saw 2 signs. One of them said, we have renters if you have a house. And then at the next one, at the other real estate office there in town, they had one that said, we need houses, we have buyers. And there's a lot of demand for properties right now.
Well, except it could have been a little smoky out in Shady Cove. That's temporary.
I was like a wall as soon as I got to the other side.
Oh, yeah. That's really tough. They're too close.
Well, we'll see what happens with that. What about people in? I should say, if I came into your office then today, what kind of rates are you giving me? Let's go over those just real quick for people, because they want to know
have
what
to
those
take
are.
a good look at you, Pete. We need some documentation.
And I know, believe me, I know that. But the reason I say that is that people always want to know what's my USDA and my this or that. So what do they come in now? And I know each situation is different.
Well, the government stuff, at least at our office, I mean, really, and I don't say this I do kind of say it to plug my company. We're about 1/4 to 0.5% from a lot of people that I've looked at. Some of the banks and places might be a little bit closer to us, but some of the stuff that I've shopped, We're in the mid threes right now for a FHA loan.
For an FHA loan.
Yeah,
okay.
for government.
Mid-threes.
So
Okay.
that's your VA loans, your USDA loans, and your FHA loans.
And now an FHA loan, remember, is 3.5% down payment, correct?
Yes.
And the mortgage insurance on that particular on FHA loans, where was that today?
Well, it's about 85 basis points, where it's a lot lower than it was
I was saying
a
they
year
lowered
ago.
it. Remember, that was a big issue on FHA loans.
That's a big issue.
Yeah.
And it doesn't go away.
Well, it's still there. It's a big issue.
Big issue for me if I was looking for a home
It's
mortgage.
a big issue when you got to pay an extra, a couple $100
That's my peak.
on a thing. Yeah.
Yeah, you talk about, and that's another thing. When you talk about fees, the USDA is raising their fees. It was a 2%
Yes.
fee, and now it's going up to 2.75.
2.75, and they must. When I read that, I at first I was, oh gosh, I'm sorry to see that, but that is a program. Remember, USDA loans. There is no government money that goes into those loans, so the 2.75 fee is what goes to fund the program. So
and it's creating some great opportunities for people
it
nationwide.
has, especially in towns like Klamath Falls
Yeah.
and
Oh,
Roseburg and
gosh,
Grants
yes,
Pass,
yeah.
who just,
You're
geez.
right.
Remember at one time, remember Joe on our show, I think it was in 2009 or whatever when we started, but remember in the rural communities at that time that people were saying if they didn't have USDA loans at that time, there would be no real estate transactions literally going on in some of those places at that time. That's how USDA saved it. Okay, so mid threes for FHA loan, USDA loan.
Yeah, and on your conventional stuff, you're going to be at if everything lines up perfect, a high 3 with us right now. I think to a low 4. So it's really going to depend if if your credit's a little jacked up, or if you're doing a refinance where you're doing some cash out or something like that. So there are different variables and risk factors that go into doing it. So if you're pulling out, if you're just saying, hey, I just want to refinance my house and get a better rate, you might get a little bit better rate than, hey, I want to pull out $30,000 cash for my house, just because historically people have taken that $30,000 and they're off buying another house and moving out of theirs, and so there was some weird stuff that went on in the past, but rates are still. I mean, I have a 4.25 and I do this for a living.
All right, what would what
Kicking
would,
yourself.
Yeah.
on a conventional loan, how much are you requiring down payments today on conventional loans?
It's just 5%.
5%.
Yeah.
I had to come up with 20%.
And
that 20%.
Historically, and it's the best if you can come up with 5%, or pardon me, 40. My daughter's calling me on the phone right now, and it's distracting me. So if you can come up with 20%, you're going to get the best deal because you don't have the mortgage insurance.
Right.
And mortgage insurance sounds neat because great, I have some extra insurance, but all you're really doing is you're paying to cover the bank in case you default. So you're just basically paying for insurance that is for somebody else.
So then when you don't default, they give that back to you, right?
What's that?
When you don't default, they keep that mortgage insurance.
Well, are people putting the 20% down? Do you see much of that, or is it just generally
all day long?
Yeah. So they are. So people are doing that.
People from California, people here too that have saved up. Okay. But for the most part, I definitely. Well, I don't know. It just depends. He just took my phone away.
What are they going to do with that then?
With the money, well, if you want to keep it in your investments or do something, if you're borrowing this money at low 4%, you might be able to go do something else with that money. You might even go buy. I had one guy come in from out of town yesterday that wants to buy a primary residence, and he wants to buy some more rentals. So he might come in with a little bit less and save some of that money for a down payment on a rental property. Yeah. And again, if you're borrowing it at low 4s, which you might probably be closer to the mid 4s if you were doing an investment property. But it makes sense to borrow.
And the influx money from the California market has just always been a mainstay of our market right here. And those folks are coming up here now armed with the equity, the favorable interest rates, the demand for rentals. It's a very attractive. The pump is primed because it's a perfect storm. If they put their money into an investment property, they have high confidence it's going to rent every month that it's available. And they're going to get a return on that. And that money's going to be working harder and earning a better return than they could put it anywhere else. And we've seen that. We've seen that be a real catalyst for our local market time and again.
Yeah, and it goes back to the more savvy, but like Pete was talking about a minute ago, the people, they're thinking, well, where does the bank make their money? Well, they loan it to you for more than they they loan it to you for a lot more than they lend it to you, and they work those margins. And if people can kind of see, I can kind of show them how to do that. I'm not a financial advisor at all, but it's pretty easy math to see if you're getting 6% over here and you're borrowing at 4%. It just makes more sense to do it. Or you're getting a 12% appreciation on some asset that you purchased for that. So that's a good time.
3.5%, kind of in that middle range for FHA loans. High threes for conventional loans. 15-year loans. Are people doing those? I mean, that's the best rate of all. Is
Man, at our age, we ought to be considering that.
Yeah, the 30 years we're going to be a little toast. But
that's just a pipe dream.
Yeah.
You'll get about a really low 3 right now. I priced one out for somebody yesterday.
Yeah. That's still the best deal out there, isn't it? And we're talking with Guy Giles from Ditech Mortgage today on the Real Estate Show, our August the 8th show. Pete and Joe, the Real Estate Guys. Don't forget, you can watch any of our shows at realestateshowOregon.com or on YouTube at our YouTube channel. Well, we love talking with you as well, and we'll be right back after this.
I didn't mean to fall apart. My daughter.
Real Estate Show rolls on here on KMED for August the 8th. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. Again, don't forget you can check out our shows at YouTube. We have a YouTube channel there at realestateshowOregon.com. We invite you to do that. Of course, we love hearing from you as well as we move through the summer here of 2015. My goodness, it's I remember back in June we were saying, gosh, we're going to get through the summer. It was going to be such a hot summer, and it certainly has been that, and dry, and with we have our typical fires, all the kinds of things that go on here in summer, isn't it? It doesn't change from year to year. It's always hot here, and it's always dry, and we're hoping we're going to have a lot of rain this year. And of course, water becomes a big issue. We'll talk with the Jackson Soil and Water Conservation District next week. Don't forget you can check out their website at jswcd.org for the upcoming fall soil and those classes. Remember that they teach out there, they fill up now. So you want to make sure if you're interested that you contact them right now. Anyway, Guy Giles from Ditech Mortgage, our resident mortgage expert, has joined us today here on the Real Estate Show. So far today now, Joe, we in August, people have been predicting for months, those interest rates were going to rise. And we found out from Guy today that FHA loans in the mid threes, 15-year loans in the low threes, a conventional loan, high threes. That's pretty darn. That's just amazing. It's really something.
Stoked. I think I should go out there and get a mortgage.
I'm trying. I should go. Yeah, you should. Anyway, but now
I will hook you. Here's the deal. I predict low rates and rain.
Okay.
So I'm going on the record today.
I want some snow.
You're right.
Higher elevation.
El Nino. Yeah.
I was. Does other people know about that too?
Yeah, I think so.
Man. Okay.
We've had a little history
El
with
Nino.
it.
Yeah, he's been out
It's
here.
going to bring the tuna in close to the shore too.
I'm
be
all
cool.
in favor of that.
I had to go 60 miles out last year.
Tuna salad, tuna sandwich, you catch tuna. Okay.
Oh yeah.
We talk. Yeah, you and I.
I'll
we
hook you
talk
up. I'll hook you up when I get back.
So are people today with I think I read in some article somewhere recently that refinancing of properties has really become a big thing again, much like it was in 2005 and 6. Remember when this was all rising up again, and then everything fell off the cliff. Are you seeing refinancing of properties coming back into play here?
Yeah, I haven't been focused on refinances for a couple of years, just because, it's either the HARP loan that people were refinancing under, and that was the government program that allowed people that didn't have equity. And that program's actually still going right now, but most of the people that kind of approved or it fit in good for them have already kind of gone down that road.
And benefited from that. That's helped some people. Yeah,
it was it's one of those government programs that if you take advantage of it, it can actually do some good there. Certainly, the program that remember the first time home buyer deal back in 2006 was it? Or 7, whatever that was, or 8. That thing saved how much of the
8,000
of the real estate business industry at that time? Yeah. But those who took advantage of it, what a great deal! And we had people who did that. We sold people who did that.
It was the difference in them being able to get into a home.
Yeah, it's amazing. So some of those programs, take advantage of them if they're out there. It's okay.
Well, yeah, I mean, your tax dollars went to bail out Fannie Mae and Freddie Mac, so you might as well be able to take a little bit of advantage.
Take advantage of something that they offer on.
Yep.
So, no, it's a good program. And, coming to this company, our rates are are really competitive. So I think that's part of the reason that I'm seeing some more refinances also.
Yeah.
Because, a lot of companies are in it for new purchase money. We just we make our money servicing the loan. We don't make our money originating the loan. So we're able to pass on lower rates to people without, just without charging them an arm and a leg to get into the loan.
All right. So I'm trying to get in my play. You're working with me. So this is going to be the test will be here over the next few months, whether Guy can actually refinance me, right? Because I have, our listeners know I have a variable rate loan that I didn't know it at the end of 10 years. You got to go start paying more on it. My payment went from $500 to $1,400, just overnight. So, okay, Guy, you got to help me here. Well, so I'm trying to refinance. And what are my issues? I mean, what are things that why should someone refinance today? Besides being crazy like me, have to have a variable rate loan.
Well, so there's a lot of people that fell into that trap. They got a loan back then, and they just were not explained, what is going to happen with that loan. So that part of the legislation that came out really, we have to. There's no boogeyman in loans anymore. So that part's kind of nice. The prepayment penalties have kind of gone away. There's not, there's not the balloon load, balloons at the end. As far as you doing your loan, if I just get the rest of your documentation, we'll be ready to go.
See, you want more documents, more documents.
You're a special case.
You got more documents. More documents.
You're a unique case, Pete.
Yeah. Well, yeah, okay, but what else are people refinancing besides that? I mean, I need to eventually. I mean, my 10 years are up. But whatever. So what else are people?
There's
what
a
are
lot
the
of
reasons
people,
would I want to? Joe's trying to do his house in a different way.
Mm-hmm.
I
think every situation is different right now.
Yeah.
Like in your case, if it wasn't one of those loans that was owned by Freddie Mac or Fannie Mae, it just doesn't fall into that government, the Making Home Affordable, the HARP program. So now that people have actually equity in their house, that's why we're seeing them. Everybody thought the refi market would be completely gone by now, but now there's a whole other group of people that are able to do something with their loan because they have equity in it.
So the 12% increases in values that we've had, the double-digit increases for the last, 2-3 years now that we've seen in Jackson County, is given enough equity to people to refinance still because we have a low interest rate and they're getting cash out?
Sometimes, yeah. Yeah, probably.
Is that the main reason why you would refinance in some ways?
Well, unless you're in a loan that's variable and going up, and all of a sudden it's amortizing.
Because most people were doing refinancing because they had a 6 or 7% loan. Remember,
yeah, right?
And you can get them down into the threes. I mean, that was a big deal. That's gone now for the most part.
You cleared those out pretty much.
Yeah.
Those who could.
Yeah, it's just people that want to get out of their variable rate. A lot of people get in, they want to settle in at retirement. I've had people come back to me and refinance their 15-year loan into a 30-year loan, where I don't necessarily suggest it, but I understand what they're doing. It's like, hey, I want to retire someday, and I want to do it. You will pay a ton less on a 15-year loan than you will a 30-year loan in interest.
Wow.
So don't ever, hear me wrong, but I have so many people that come back to me that say, hey, I did a loan 4 years ago. I thought that I was going to do this. Now I want to settle down. My wife doesn't want to work anymore, or I don't want to, and we want to get our finances in order. So I would encourage anybody that's going to get a loan. Like I said, I would never tell you not to do a shorter term loan because you will pay a lot less interest. And my heart is just to do one loan for you, but get you into the right loan. I'm not in the business of doing one loan for you now, hoping that 4 years from now I put you in a crappy enough loan that you're going to refinance with me and I'm going to make a whole bunch more money off of you.
That wouldn't be
one
good.
time and do it right and have you set.
Yeah. So really, that's one thing is just getting into the right program, and life happens. So, sometimes, you think you're getting into the right program. That guy yesterday that I quoted on that 15-year loan, he actually paid off his first house. His house in California now is free and clear. He did it in 15 years. It's all done, and that it does happen. So it's not a bad thing.
And why is refinancing
that's the creation of wealth right there? Mm-hmm. Paid that down, and the property value now has soared for him.
Oh yeah, yeah. And he's kicking himself for not buying more houses in the crunch. I think we all are.
Why the interest rate on refinancing higher than the purchase of a house?
I think a lot of times it probably came originally from just kind of redoing your own book. If you're the investor in there and then somebody refinances and goes right back in and say you work at a Wells Fargo and you walk in and you refinance your loan with Wells Fargo, you have a lot of times those same investors, and they're thinking, wow, all I did is now I'm giving them 2% less of a rate. So I think there was a little bit of a premium on that, and it's kind of just stuck. Is really, and if people are pulling cash out of their house or doing something, there could be a little bit more risk there.
And refinances are what, like about 0.5% generally, a little bit higher than you would find on the regular market?
Probably more like a quarter? At least
Okay.
with us.
Yeah.
And I haven't done a ton of refinances, to be really honest, until I came to this company, just because we weren't as competitive as I.
Well, you may be
as I
doing.
thought.
You may be doing more of them because certain situations with values rising, and people need equity and need cash or whatever. I mean, that's what it's for. That's what it's about.
I've shared this several times on the show. I bought in 09 for 195, dropped to about 145 by the end of 11, and now it's worth about 230, 235, and I paid it down over those years. So there's a lot of equity that's been generated by these favorable market conditions and the raising property values.
All right. We're talking with Guy Giles from Ditech Mortgage today on the Real Estate Show. Don't forget, we're coming right back after this. Real Estate Show rolls on August the 8th. Here's second weekend of the month of August, heading into football season. Labor Day, the end of summer actually is, I guess, within sight. I always knew the end of summer came along to his football season when the Ashland City Band ended their summer concerts. It was the end of the summer.
We got about a week to go, so you're giving it the wrap.
Yeah, one more week, and then we turn our attention to that. And today we're with Guy Giles from Ditech Mortgage here on the Real Estate Show, talking about all sorts of mortgages and mortgage interests and what we're seeing out there. It's still a terrific rates, and again, I've been saying they're going to stay down there because this country right now, and we're weaned on low interest rates, and boy, if they go up, it's going to be it'll change everything. Anyway, so we don't want it, right now. I hope it doesn't.
If it goes up, then that means there's some other healthy things going on in the markets too. So it'll be a good thing.
And Guy, we had Lennox Scott, who was the owner of John L. Scott from Seattle, was down here, and he gave a presentation which was talking about the West Coast real estate market, the Chinese influence coming in here, the purchases of properties of them, the Californians who are coming up into the Northwest, all the baby boomers, retiring, as you said, Joe, earlier, coming into here. He says this thing's going to continue on for some time with little blips along the way, and he's an NAR Research Council, guy. I mean, he knows this stuff. They're really optimistic, and I've changed my tune. I mean, I'm totally on that bandwagon right now.
We're all going to have to move to Alaska before we die to get back to Oregon.
Yeah.
I had a guy call me last week from Alaska and say he wanted to move down here, and I'm just thinking, man, fish just jump in your truck when you drive down the street there. I don't know why you'd want to move.
And we want to give a shout out to one of our good listeners on the Real Estate Show.
Oh, we've been working with Stephen Saval with a listing over on Sandoz Street in Central Point. We had an open house a week before last at our John L. Scott Extravaganza. Pete, he's the best marketing agent for our real estate show you could ask for. Yeah. Everybody who came to the open house got a thorough rundown of what time the show's on, but a really dedicated listener, and it's just great to get that feedback from folks that truly get some benefit from our gatherings.
Do you know the address by heart so people can come by and check out that
1040 Sandoz in
nice.
Twin Creeks.
It's in Twin Creeks, yeah.
And we've got a little price reduction that's coming on that. You want to take a peek this weekend.
Guy might want to buy that house, because there's your first rental. There you go, got a rental right there.
Investment property.
Investment property.
I bought a rental and then chickened out and sold it. So I've been down the road. I'm actually looking for some horse property. I got a daughter with a horse habit. So yeah, I'm looking for something with a little bit of acreage, possibly. She's looking for something. I'm thinking you're 18 years old. You're going to go off and probably be a beaver in about a year, and now I'm going to get stuck with more horses and more stuff.
They're not going with her, by the way.
Yeah.
Just so you know, I can think of a lot of worse habits.
Yeah, that is true.
18-year-old daughter to have, and horse habit's a good one.
See, Guy, like many people, looking for a rural property that you can do something on and with, and that's the demand of that is going to continue in our county.
We can have chickens in Medford.
Question. And well, speaking of that, and I'm glad you brought that up because again, the National Association of Realtors are changing a lot of their tunes on this. That the demand right now they call them backyard farms, and then they're nowhere near a farm. That is a truly huge move in this country, And cities need to get with it because people are demanding these things when they come in to look at properties now. You know, and you live in the urban areas. I want chickens. I want this. And we're going to have to deal with that. Isn't that funny? I mean, who would have ever thought that this was? But the demand of that is out there, and it's affecting real estate in many, many communities. It's going to affect us here because we're in the GMO-free world. I'm
on Aspen Street between Peach and Columbus, and I hear chickens clucking all the time from the backyard of the house across the street, and I find it really soothing, actually. But
well, as long as they
you're probably not going to move in next to me.
Rooster in there or something.
No, you can't. You can't have a rooster.
Right.
Oh.
But you can have everything from bees to chickens to what? I should know more of these animals, but. Anyway, it's interesting. That's a whole nother world of real estate that we haven't even talked about. Yeah. That's going to become. It's already here. It's already here.
Yeah, and the small farms and the sustainable farming and the local sustainability is a huge part of our real estate and our cultural future.
Yeah. Well, if you're interested in kinds of getting information about mortgages, Guy is the guy to talk to. And so, how can I know? And you've got an office. Tell people where you're at because I know that.
I thought Dytech.com. Do I even get to talk to you?
Oh, yeah.
See your smiling face?
That was the whole point of this. I mean, to be perfectly honest, I don't know how well you could do mortgages just online if that was the only way it was, because people do like the personal touch. And that was what was intriguing about coming to work here is I get to do the online pricing but have a storefront with my processor sitting right there with me. So I get all of the best of both worlds, to be honest. Because we service, close to $300 billion in loans, we're not afraid to take on something. If Fannie Mae says, look, this is the way we can do it, we do it. And I've actually had a few real estate agents be really surprised thinking that we'd be tougher because all the little guys always say, well, this is all we do is purchase money and we can do this and that. But they're scared to buy back a loan. And we're just not afraid of that. At least that's what I've found. I've just been pleasantly surprised. But, yeah, we're actually in the Social Security building, 3501 Excel Drive. Just not tomorrow or Friday unless you call first.
See, now, Guy says where Excel Drive is. I didn't even know where Excel Drive was.
Do you know somewhere out by the airport.
It's somewhere out by Costco. That's what I was saying. Somewhere out by Costco. Well, there's a lot of there. Yeah. I found him, and he's got a great office overlooking the airport. But you may have that may be the new paradigm of mortgages. As you say, you've got the online part of it, and you have to fill out this stuff, your forms. Online.
You don't. You could have come in and done them with me, face to face. Oh, absolutely. Yeah. I mean, we are a traditional mortgage company. A lot of people prefer to just jump online and put in their information, and then I can be kind of prepared when they show up for a face to face. But I always like to do a face to face.
What I'm saying, but that's the thing I was saying is that you've got the online part of it, and then you've got a storefront and a person that you can actually deal with. Boy, I tell you. I won't deal. I'm one of those who will not deal online only for that. Anything that. I won't do that.
I'm the same way.
Yeah.
I really am. And I wouldn't have come unless it was just, again, kind of the best of both worlds.
All right. So how can someone get a hold of you? Because, there's still a lot going on, and
I want to come out
and see.
I want to come out and talk about low interest rates, opportunities for refis. I want to watch some airplanes take off and land.
There you go.
This time of the year with the fires, when you can see the airport, even though I'm right next door to it, but it has been really kind of cool watching the bombers coming in and out all day long.
Yeah.
I saw a couple of Erickson-looking helicopters, but they had different paint on them. Yeah. Going down to California a couple days ago.
Mm-hmm.
And
so how can they get a hold of you then?
Best way is my phone number. It's my cell phone, too, 541-944-6987.
And you can also Google Guy and use Dytech Mortgage, and he'll pop up there, and they can also find you there and get a hold of him.
I personally am not going to Google Guy.
Yeah. So you don't think that I'm crazy to refinance?
You're looking at some kind of list.
So you don't think I'm crazy to refinance? Because my interest rate's going to go up when I refinance. So
you're a perfect candidate,
right? So I can still do that. Smart.
Well,
smart
yeah, absolutely. At some point, it will go up.
Right,
so
well, the saga continues.
Good job, Guy. Good show.
That'll do it for the Real Estate Show here on KMED for August the 8th. Don't forget, we'll be back next week talking about water with the Jackson Soil Water Conservation District. Have a great week, everybody. For Pete and Joe, God bless you. We'll see you next week here on KMED.
You've been listening to the Real Estate Show on KMED AM and FM radio, presented by John L. Scott Real Estate of Southern Oregon, along with All Cities Property Management, the Home Builders Association of Jackson County, Dytech Mortgage, the Jackson Hudson Soil and Water Conservation District and the Rogue Valley Association of Realtors. For guest information or to watch a past show, visit us online at realestateshoworegon.com. Join us again next weekend for Southern Oregon's one and only real estate show on KMED.